Market sells off sharply yesterday. What does that mean for the markets and your money? That's coming up on 3 Minutes on Markets and Money. On Friday, the markets had sold off a bit after failing at the 200-day moving average. Of course, Monday morning comes around and markets open down fairly sharply. In fact, it's the worst day since really the markets found its bottom back in July. So again, one of the things we've talked about is markets were very extended, very overbought, needed a pullback here. And we had identified a few levels of support that were kind of critical for the markets to hang on to. Now, yesterday we sliced right through the 20-day moving average. Now, this morning, markets are scheduled to kind of open up here a little bit. Now, it's kind of a mild open, and I don't suspect it will stick, but markets will probably try to retest that 20-day moving average, try to get back above that. If possible, that would be a mark that maybe markets kind of hang around here around this 20-day moving average, follow this kind of rising trend line that we've been setting with the 20-day over the last 9 weeks. That might be a bit of a challenge here. Now, just below that, of course, is the 100-day moving average running right about 40.80 on the S&P 500. So that is the more logical level of support for the markets. Wouldn't be surprised that we could see markets open up here a little bit this morning just because the sell-off was so sharp yesterday. See a little bit of a reflexive rally might be a good opportunity to kind of lift some assets out of the markets, rebalance your risk in your portfolio. If you've got some nice gains in positions, might want to lock some of those in here. As I said, the most logical support is going to be right at that 100-day moving average. A failure of that, and we're going to come down and retest this 50-day moving average, which is right around 39.50, call it 4,000. That'll be that psychological kind of number. That'll also be roughly about a 50% retracement of the rally from the lows. So again, kind of a very key level of support sitting right at the 50-day moving average. Now, break below that, we're going to retest lows, potentially even set new lows. The one indicator here that we're watching closely, because this is going to tell us a lot about where the next opportunity to put money to work is this MACD indicator that we've been talking about here for the last couple of weeks. That did trigger a sell signal yesterday. Now, if the market rallies very sharply today, and markets are up about 1% by the end of this afternoon, we'll probably reverse that signal, at least temporarily. More than likely, I suspect that this sell signal is going to stick, and we could see a period where markets kind of trend negatively a bit, working off kind of some of this overbought condition. We did kind of initially reduce some overbought condition yesterday, but again, we've been kind of so overbought for so long, we can also be oversold here for a while. Let markets come down, kind of start finding a base somewhere along support, work off that overbought condition, allow this MACD indicator work through a cycle and begin to turn back up. And that, if that occurs, that's going to be your next best opportunity to add money. So, as we start to think about the markets over the rest of this month, Jackson Hole coming up next week, that's going to be important. That's the economic confab of all the central bankers talking about global monetary policy. Then we've got the Fed central bank meeting and their next rate hike coming in September. If we can the markets kind of hold on to support through that, then we get set up potentially for a rally into the year end as we get back into the seasonally strong period of the year. So our next best opportunity to add money to the markets is going to be watching this MACD indicator and looking for the next buy signal whenever it occurs. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.